Hey, good morning everyone, and welcome to the PivotBoss Pre-Market Report for September 30th, 2016. I am Frank Ochoa, aka PivotBoss. Here's a look at the daily time frame of the ES. What you see right now is basically price coiling up. It continues to just chop back and forth around this 2144. What we're seeing early this morning is already a rejection of the lows from the previous session. So price pushed below the previous session's lows, rejected, and we're now back up a little higher. So basically, right now, bulls are defending the September 21st FOMC key level of 2135 quarter. It took a bid that day, and they defended it here on a couple of rotations. Basically, that's the idea. From 2167 to 2135, that's the trading range right now, short term, as price continues to develop within this wider pattern. You can also see the impulse move here from this high, 2190, basically, down to this low, 2100. The midpoint is at 2144, and price is just stuck to that level right now. That's a major pivot in the charts. Eventually, we're going to see significant expansion from this range, but again, you have to be very careful and avoid the whipsaws. Short term, we're just chopping back and forth, so you got to be very nimble, and you have to be able to mind your risk. Looking at the intraday time frame here, let's go down into the intraday. Again, the previous session's low is very important. You can see it right here. Very important part of the PivotBoss pivots. That previous session's low, you can see how price pushed below it, failed to hold, the stops came out, and then here's the retest leg, and then prices have pushed back to the previous session's close. So that's the overnight movement right now. Basically, anything into the FOMC level of 2135 has been bid, and prices have pushed higher into as high as 2167. So right now you got to be able to play the trading range short term. Eventually we will see expansion from this range though. Let's take a look at the crude oil chart here. Let's look at the higher time frame. We'll go to the PivotBoss pivots for the weekly here. One thing that's interesting is that we saw that major expansion event just a couple of sessions ago. Right here, the OPEC crude oil inventories day, stops come out. We mentioned that typically speaking, you want to see bulls come back and defend. We were looking at 46.60 as an area to defend yesterday, and as low as 46s. Price got to 46.60, held. That's the previous week's high price. You see that right there? In pushing above that high, bulls came in and defended. We talked about 48.29 being the potential high yesterday because that is the 50% expansion of the previous week's range. The high of the day turned out to be 48.32, so we were just 3 ticks off our ultimate destination yesterday. Now, again, pullbacks are to be defended short term in crude. 48 is a significant key level. Very, very important key level. So if prices can push beyond 48, we could be looking at a move into the recent highs here between 50 and 52. But you have to be very careful around 48s because if there's any failure to hold 48s, we could be swinging right back into 43s and we could be trading back in that range. Remember, I mentioned when you get toward the apex of a triangle type pattern, all of the back and forth whipsaws occur right here. So be very, very careful around 48s. That's a very important number. And if there's any failure to hold above 48s, we could be looking at a swing move back toward 43s. On an intraday basis here, let's take a look. Looking at the intraday chart for crude, right now what you're seeing again, the 47.25, very important short term. Price came down into that level in overnight trading, tried to hold, failed, and now we've seen a return back to the previous session's close price. Again, 48 is going to be very important, and pullbacks in this current up move are likely to be defended. So every time price pulls back in crude, look for bulls to defend and attempt to squeeze this thing higher. All right, let's take a look here at gold futures. Here's gold. Let's bring up again our template here. If we come over this way, again, what we were looking for in gold has been trading range activity. Ever since price pushed through these recent lows, we knew the stops were going to come out. The idea was that bears would look to defend pullbacks for a shot at seeing a move into 1305 to 1310. Right now, what we're seeing is a great selling opportunity in gold short term because what we're seeing is this high and even this high, 2-day highs being rejected today, already pre-market, and now into RTH. So you can see these highs right here barely taking out the prior session highs, and then now we're back trading lower. in a down moving market or a downtrending market, failed acceptance beyond the previous session's highs is usually a great selling opportunity for a continuation. So right now, the way it appears, it looks like bears are looking to extend this thing downward into our area of support. Again, until proven otherwise, bulls want to continue to look to defend this area of support, 1305 to 1310. But any failure to hold that level for a period of time could open up a major pullback toward 1203. All right, let's take a look here at the NQ now. The NQ in a higher time frame still holding at these highs. 48.20 remains a major pivot in the charts. You can see here that prices have basically held the FOMC level from September, just like the ES so far. You see it go bid on the day of. You see it be defended here, and now very close on the last couple of days coming into that level, and now we're back up. So clearly bulls are defending the Fed number here at 48.04. Any failure to hold that level would result in the stops being run back down toward recent key levels. So right now, very important 4800 level. You have about a 100 handle trading range, and right now it's not really the best opportunity to trade outside this range. It's just fade the edges at the moment. Let's take a look at the intraday time frame for the NQ. Again, what we're seeing here is a failure to hold below the previous session's lows. There's the white line, that's the previous session's low. Look how price pushed just below it, rejection occurs, and then price shoots back to value. First VWAP, and then climbs up toward the current pivot range for the day. You also see the previous session's close. Anytime you reject at the previous session's lows, the expectation is for a test at the previous session's close. We got that already. You see VWAP trending up a little bit, so pull back into this zone could offer a short-term buying opportunity for further strength short-term. But right now, we have a trading range market. Look to defend 4800s. Above 48.50 opens the door to a move toward the outer edge at 48.76. All right, that's it for now. Let's see how this thing plays out heading into the rest of the session. Good luck, trade well, and happy Friday.